Many financial analysts and experts have foretold a looming, calamitous inflation. In a tweet, Robert Kiyosaki said, "Bad news, depression coming." Perhaps an even more scary warning was when hedge fund boss Bill Ackman stated his fears for the future of the stock market in 3 words: hell is coming. But despite the disastrous predictions of other finance experts like Kiyosaki and Ackman, Cathie Wood seems to be optimistic about the market's future. She has said that the stock market is probably going to be fine, but does her bold optimism have any grounds, or is inflation at the door? Find out in today's video as we consider if we have any reason to be optimistic about the future of the stock market. What exactly are the prevailing signs about the market's future? And when we will know the market's future for sure. Cathie Wood is no newcomer in the world of finance. She is CEO of investment firm ARK Invest, and she is what you can call a superstar stock picker. In defending her optimism about the future of the stock market, Wood points out that value stocks, cyclical stocks, and defensive stocks have all continued to rise regardless of the effects of the COVID-19 pandemic and a disrupted economy have had on them. In the face of this steady rise in stocks, Cathie Wood says she is confident that inflation will in fact unwind pretty quickly, and that we don't have an inflation problem. While we want to wholeheartedly believe Cathie's report, there are just too many signs not putting our minds at ease. Among one of these signs is annual inflation rate in the United States, which has now soared to 8.6% in May 2022. The highest it has been since December 1981, and more than market expectations of 8.3%. According to the Organization of Economic Cooperation and Development, prices in the United States rose at a pace of 4.7% last year, higher than any other economy in the group of 7 advanced economies. The current level of inflation in the US has not been reached since 40 years ago. Costs of petrol, food, and other necessities have soared in May and are still on the rise. Well, in the face of all these, on what grounds does Wood stand to make her claims? Wood, in explaining her view, mentioned 2 variables that she believes support her claims: productivity and the oil market. Wood argued that market watchers are prone to undervaluing the impact productivity gains have on long-term inflation. The recent wage data that showed the average hourly earnings have increased by approximately 5%, but according to her estimation, the figure is likely closer to a 3% increase in real terms due to higher productivity for workers compared to what we saw last year. She continued by saying that failing to acknowledge productivity gains will eventually result in an error of judgment regarding the trajectory of inflation. Speaking on her second variable, oil, Wood agreed that even though the price of crude oil has risen to $90 per barrel, the price increase will become self-correcting since it will eventually encourage supply to return to the market and balance out the inflation equation. Seeing a US oil production has reached a peak in 2019 of 12.3 million barrels per day, making it the world's greatest energy producer. Wood says that the apparent fact that we will be getting up to 12 million barrels per day in 2022 and up to 12.6 million barrels per day in 2023 will eventually nudge supply back to the market and stabilize the inflation equation. Wood's optimism is impressive, but even the Fed has acknowledged the inflation and is set to do something about it. Take a look at Dave Ramsey talk about it.
Well, George, everybody's talking about the Fed raising the Fed rate 75 basis points. And the Fed, of course, did this to stop inflation.
Fed Chairman Jerome Powell has revealed that in the Fed's efforts to bring down interest rates will be increased by 0.75%, which will be the highest the Fed has hiked interest rates since 1994. That's not all. There are speculations based on Powell's comments that the Fed could hike interest rates by another 0.50% or 0.75% in July, which further proves the realness and severity of inflation. So do we believe finance expert or the Federal Reserve? We'll let you decide.